What's up? What's up? Welcome back to another trade video. I almost said trade recap. Oh my goodness, I'm so used to that. But regardless, welcome back to day 2 of the Profit Syndicate. Today we're going to be going over market structure. First of all, I hope you guys had a awesome Christmas, Hanukkah, whatever you celebrate. Hope you guys had happy holidays in general. And yeah, today's going to be day 2, like I said, of the Profit Syndicate, and we're going to be getting into market structure. So going to keep this video pretty short, pretty simple, just kind of get to the point. I want to make this as simple and as straightforward for you guys as humanly possible, because trading deserves to be simplified and not overcomplicated like all these other gurus put it out to be as. So let's quit the dilly-dallying. Let me move this mic back over here and let's get in straight into this mentorship series. So I'm very excited to start this. So if you haven't watched the first video yet about psychology, I highly recommend you go ahead and watch that before watching this. It's very important. I would not skip out on it if I were you. Okay, now that we got that out of the way, let's go ahead and get into this. Market structure, it's the roadmap of price movement, right? What I said is how traders decode the story of the market, and there are 3 types of market structure that you need to get your hands on and know immediately. It's just essential. First one we got is uptrend. Very important. Simple. It's when price makes higher highs and higher lows. Think of it like you're climbing a staircase, okay? Complete opposite of that is downtrend, okay? The downtrend is when price makes lower lows and lower highs. It's like just going down that same exact staircase, okay? And the third one we got is the sideways market or consolidation profile. This is when price bounces between a top and a bottom, or it doesn't necessarily need to be a top or a high or a low. It can bounce between whatever, and kind of not making any clear progress in terms of efficient price movement, and it's just kind of pacing back and forth. So why does all this matter? Why is this important? Why do we have to know this? Well, understanding the market structure is the foundation of making these smart trading decisions, and if you can't make these smart trading decisions, you're not going to have something consistent that could give you, or that can yield you consistent profits over time. Right? Our goal here is to build ourselves an edge that we can consistently put on risk every single day with to get profits from. Understanding this and not complicating it for yourself is the best thing. It's what's going to make you a good trader. So let's start with an uptrend, shall we? So all an uptrend is, if we could take out one of these tools here, is when price puts in higher highs and higher lows. So if we look at this, right, current market structure visual that I've given you here, right? Our low is this here, our high is this here, our lower high is this here, higher high, lower high, higher high, lower high, higher high, so on and so forth, right? This is our basic uptrend, okay? There's going to be little dips and up and downs in between each little price movement, but that's normal within market structure, okay? It's not going to always look this perfect, okay? As you can see, it's just making uptrend, right? Let's say if you look at the right side on the y-axis, 25,771. Price makes an uptrend and casually goes up in price, right? X-axis is time, y-axis is price. Aligning these two, perfect, bro. It's all you need, bro. It's all you need. But holy God. Hey, let's just act like that never happened, okay? Uptrend. We got that down, okay? Downtrend, same exact thing, but it's the complete opposite. Puts in a high, low, lower high, lower low, lower high, lower low, lower high, so on and so forth. You get the gist, okay? A little pro tip here as well that I included within here. When trading trends, look for pullbacks to key levels for your entries, right? It's all about catching the wave at the right time now. What do I mean by this? If you look, after every pullback that we get, price delivers lower. Another pullback, price delivers lower. Another pullback, price delivers lower. The way I trade is I find inversions within this leg that pulls up or within the down leg for bullish scenario, and I wait for an inversion for value gap, and I'll enter usually on the close through it or wait for a pullback. But I'm not going to get into my strategy yet, just kind of giving sneak peeks of what I do. So this bullish market structure and bearish market structure, very simple. We could just type it out for you guys. Bullish market structure. All right, we'll make that a bit bigger for you guys. And bearish market structure, okay? Screenshot that, do whatever you please. This is exactly what bullish and bearish market structure is. Very simple, okay? And then what's the third profile? Like I said, it's the consolidation profile or the sideways market. Same thing. All that is when price puts in a high, puts in a low, and decides to trade inside of that range without breaking out until our manipulation, which then will trade us in the opposite direction. You don't want to be trading this. You want to wait for that manipulation outside of the range to then trade the opposing way. This is simple power of 3, AMD. We'll go over that later in this mentorship, okay? Sticking with market structure right now, I'm just giving you little hints of what there is to come, okay? Bullish, bearish, sideways, sideways markets, okay? Don't trade. Please, 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 please. Don't trade this. Please don't trade this. This, yes. This, yes. This, no. Bad. Way too many people get caught up in this and lose everything. Please don't be that person. I beg. Okay? So, now that we got that out of the way, let's go ahead and look. We've already identified how to identify these trends and know when it's bullish or bearish, okay? So, flip it for a downtrend, we got that, all that, cool. So now what are we gonna get into? Reversals. Everyone loves reversals. Oh my God, I can't get enough DMs and all these different questions asking, how do I get the top? How do I get the bottom? Blah, blah, blah. Before I get on to explaining how to spot reversals and what they are, first thing you need to realize is that you do not, and I repeat, you do not need to catch the top and the bottom of every single move, bro. There are people that trade like that. That's how they're comfortable trading. If you want to trade like that, by all means, bro, use what I'm giving you here and trade like that, just using that way. Okay? By all means, go for it, bro. But from back testing and from experience and me trading like that, I've noticed my win rate has been a significantly lower versus the way I trade now. So just put that in mind. Again, you don't need to catch the top and the bottom. All you need is a piece of the pie, bro, to make life-changing money. Just a piece, bro. And what I mean by that is 10, 15 points. And to give you a reference of what 10 to 15 points is on a 1 minute time frame in AM session, 10 to 15 points, that's 10 points, bro. You can easily catch a move like this. Depending on the volatility of the day, you can easily catch 50 to 60 points, bro. Right? Some days might not be this volatile, and you won't be able to catch as many points, but you get the idea. Okay, how can we spot these reversals? How can we know when it's going to reverse? First of all, what are reversals? All a reversal is when price comes up to a key level and simply just shifts the trend instead of price keeping on going up, right? It hits a key level and then literally it means what it means. It reverses, or it means what it sounds like. It reverses and then goes to the opposing other end of the range, right? So now that we know what a reversal is, right? Reversal up, reversal down, whatever. How do we know when it's going to reverse? This is very important. Let's go up here. Let me explain this first. Let's say we're looking at ES and NQ here, right? These are two correlated assets. So if we're looking at a candle here, imagine this is ES, this is NQ right here, okay? Let's say that these candles both have wicks, okay? Right? Let's draw another candle out here. Now let's say ES fails to take this high, okay? And let's say NQ does take the high. The cracking correlation between these assets, meaning this high getting taken right here, this high getting taken by this high, and this high not getting taken by this high, tells me that we have an SMT, or smart money technique. That's the cracking correlation that I'm looking for. So being able to see something like this on a 15-minute time frame and above, usually it can be a 5. I mean, price is fractal, guys. At the end of the day, price is fractal. It doesn't matter. Okay, but identifying something like this inside of a key level, that's when I know price is going to reverse. Well, I don't know, but I have very strong conviction that price is going to do that. So now that we understand what an SMT is, I'll explain it all right now so you can understand it on the chart, okay? And then I'll show you market structure, and then I want to go over swing points with you guys in this video as well. I'm just going to throw in little bits of it just so you guys can get some sauce here and there. But I'll bring him up later in other bootcamp videos as well, mentorship videos, whatever. So if we look here on the 30-minute time frame, we have our sessions in play, okay? Asia's blue, London is like orangish, New York is green, lunch is yellow, PM is purple, okay? That doesn't matter right now, I'm just explaining that. So if you look here on NQ, what do we notice? Well, we have a swing high here. Like again, I'll get into what those are in a second. But if you look, you'll notice that this wick here never takes out this high, right? We create a failure swing. So we put in a high here and we fail to take it out. But if you look here on the other chart on ES, you'll notice that that exact same high was swept out by the exact same high that didn't take out this high on ES. Just a cracking correlation. That's the exact same thing I'm showing you here. One takes the high, one doesn't. That's all an SMT is. It's the same thing on a bullish scenario. If you have an SMT at the highs, it's going to be bearish. If you have an SMT at the lows, it's going to be bullish, okay? Another thing I'll explain, any lows that you see on the bottom of the candles, that's all sell side liquidity, okay? Most of the time you wait for sell side to get swept to look for longs, or you wait for sell side to get swept to look for buys, or you wait for buy side to get swept to look for sells, right? Sells are shorts, longs are buys, okay? Now, having a key level inside with an SMT is very important, okay? All I mean by that is a fair value gap, an order block, or a mitigation block. I'm not gonna explain all those right now in this video. I'm gonna save that for later, but that's how I spot reversals, is an SMT inside of a key level. That's it. Every time that happens, look, SMT, key level, boom, shoots down. SMT inside a key level here as well, boom, shoots up. It happens every single day, guys. That's how I frame my bias for the day. Look at what Asia session does, look at what London session does, and then just go off of that. So real quick, just gonna go over what swing points are before I end off the video. So let me go and move this over here. All a swing point is, let's say we have a 3 candle sequence here, okay? And we're gonna make this, we'll show you bullish and bearish, why not? So let's say you got 3 candles here, right? Bodies don't matter, right? The bodies are this. Body here, body here. The bodies do not matter, okay? For this specific scenario. So all a swing high or a swing low is this. Swing high is when the middle candle's wick is higher than the one on the left and the one on the right. A swing low is the same exact thing, but just flipped. The middle candle wick is lower than the one on the left and the one on the right. Now, sometimes, let's say this is a 1 minute time frame. You'll be able to see a swing point here, but sometimes if you go to a 5 minute, this swing point will no longer be a swing point. And that's what I mean by priceless fractal. You have to always be switching between time frames to get your bias. That's all a swing point is. Swing high, swing low. Now let's go in the charts and give you examples as to what these things are. So let's go back to our bullish market structure ideology here, okay? This is our low that we put in, okay? Boom, swing low, right? Because the one next to it is lower than the middle one, and the one on the right is higher. Sorry, the one on the left is lower than the one in the middle, and the one on the right is lower than the one in the middle. That's your swing low. So we put in the swing low, right? No more swing highs anywhere yet. This one is not higher. This one is not lower than that one. That one's not lower than that one, right? There's no swing highs anywhere here. Boom, this is our swing high, right? There's no wick here, but it's still a body, it's valid, right? It's still higher than the one on the right and the one on the left, so that's your swing high. Boom, another swing low, right? Because it's higher than the one on the left, or lower than the one on the left, and lower than the one on the right. That's your next swing low, right? Swing high, swing low, swing high. That's the basics. I keep hitting my damn mic. This is the overall basis of market structure on a chart, right? I showed you what it looked like with lines right here, whatever it was. This is what it looks like in price. It's all fractal. It looks the exact same. Same thing goes for downtrend. High, low, high, low, high, low, high. It's the same thing. It's not that complicated. Okay. Consolidation is the same thing. I mean, you could see it here, right? We put in a high, we put in a low, we trade inside of it, right? And then we finally break out of it here. right? Look, this, put in a high, a low, and then we just chop, 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 and then we finally break out of it with this candle here at 2 a.m. Right? You'll notice it still kind of accumulates a little bit, but once the time is right, 9:30, it delivers us to our draw, right? Simple as that, okay? So let's go back here and let's conclude everything, right? We've gone over our types of market structure, our uptrends, our downtrends, and our sideways markets. And we've gone over to how to identify these trends and how to spot reversals, okay? I know I put how to trade sideways markets effectively in here, but I'm not gonna teach you guys how to trade choppy markets. I'll put that in later into the boot camp, the mentorship, whatever, but I'm gonna leave that out for this video now. This is just gonna be going over market structure and with a little bit of gems in there as well. So that's pretty much it for this entire video. Mastering the basics is the first step in becoming that profitable trader that you always wanted to be. Keep practicing and the markets will start to make so much sense. So yeah, that's all we got for day 2. Hopefully you guys enjoyed this. I do not want to see people watching this and then the view count start to drop, okay? I'm kind enough to be giving my time to you guys for free, putting all this effort into making these videos so that you guys can learn, okay? This is something that you need to take seriously, and this can't be something that you want to just throw off to the side and come back to later. Genuinely think about making this something that you have to stick to for a while to actually see work. But hey, don't get me wrong, I've seen people make money within a month from this, so it's all up to you at your discretion, and I'm simply here to just give you the tools that you need to be that self-sufficient and profitable trader. So a lot more stuff coming. This is only day 2. I better see people continue on watching this series because this is going to change lives. And I guarantee it. I was in the same boat as most of you guys mainly on here who are watching this. It wasn't an easy ride, but once you get through it, bro, you realize it was you the whole time. And no one is going to come to save you at the end of the day. So with that said, beautiful end to day 2. I hope you guys enjoyed the video. Please leave a like, subscribe to the channel if you haven't already. So much good stuff coming. You guys have no idea. If you haven't, join the free Discord. Lots of free content in there as well. I'm gonna start live trading a lot coming into the new year. So stay tuned for that as well. And yeah, boys, I will catch you guys on day 3 and stay hard, and I will catch you guys later. Peace.